Hi, my name is Tyler, and this is the Professional Network. I'm here today with Kevin, a good friend of mine. Kevin, I'll let you introduce yourself.
Hi, my name's Kevin McGraw. I'm a financial advisor, about 30 years old, and hey, thank you so much for having me on the podcast.
Yeah, absolutely, absolutely. So let's go ahead and dive in. Tell me about your role as a financial advisor and how much you make.
Yeah, so I'm a financial advisor for one of the big firms in the area. I make 85,000 as kind of base salary, and then I do have a bonus that ends up bringing it a little closer to 100.
Nice, that's wonderful. How did you discover your role?
Yeah, so ever since I was young, I wanted to get into sales. And as I was going through college, I was studying econ, and I realized that the market is a very fascinating, it's just super fascinating. And so I wanted to find a way to kind of mold those two together where I could use practical economics, but also be in a sales role. And I landed myself as a financial advisor.
That's awesome. I mean, it's great that you were able to find a combination of the items that you were interested in. So you went to college. What did you major in?
Yeah, so as I mentioned, I was an economics major with a business minor at Colorado State University, and it was really a fun time in life. I can't say I was necessarily the most studious person, but C's get degrees, right?
Yeah, no, absolutely. So kind of touches a little bit on it, but go ahead and tell us about the type of student you were.
Yeah, absolutely. So for me, my college experience was all about enjoying the 4 years that I had there. Um, I was really fortunate that student or being a student was never necessarily hard, but I was never necessarily motivated either. So I think I was a 3.0 or 3.2 student, and I remember one year my parents bet me that I couldn't do a 3.5, and I did a 3.75 just to prove them wrong. So for me it was all about, everyone says that college is supposed to be the best time of your life, and as you know, that's fun until you have adult money, which is way more fun. But for me, it was, I want to enjoy college for the reasons, and I wasn't a huge partier. I was, riding bikes, playing frisbee, hanging out with friends, and I would say school was kind of an afterthought.
Fair. No, that's absolutely, a pretty common thing I think between a lot of people is not really kind of, or just kind of trying to go and check that box, which, you know,
Absolutely. But for a lot of people, you look at it, if you're a lawyer, if you're a doctor, if you're an engineer, like you have a very strict curriculum. But for a lot of these degrees, or for a lot of the jobs outside of college, it's really, do you have a piece of paper that says you can do your chores?
right. It's more so about the commitment to it.
Right.
Yeah.
Could you deal 4 years of doing what people told you to do? If so, here's a job.
Right. Absolutely. Couldn't agree more. Going into that, what advice would you go back and give yourself?
Yeah, so knowing what I know now, I would say my biggest mistake was, number one, how serious I took things and how serious I take myself. So looking back, there was a lot of opportunity for me to take certain things in my life, like interviews, my first job, studying for tests. I could have taken those more seriously. And at the same time, I think that I had such a higher opinion of myself that I shouldn't have taken myself so seriously. Because when you start out fresh out of college, you think you know everything, right? Like you have a degree that's effectively a piece of paper, but you go in and you're like, oh, well, I'm never going to work in this particular area. So for me, it was call centers. I was never going to be a call center person. I was just going to go straight into sales, going to knock it out of the park. And that's great until you fail the Series 7 on your first go around. You get fired, and then 2 years later, you're in a call center. But you then realize that call centers are a great place to get knowledge and experience. And that's where I wish I had taken the testing more seriously, but also myself less serious, because I think I could have gotten to the same spot I am now with fewer road bumps or bumps in the road.
Right. And I think that's a very common afterthought for a lot of people is realizing, just how humbling it is when you actually get into the job field and
Absolutely.
understand just how overwhelming everything can be. And it really, it knocks you down a peg.
Absolutely.
So let's go ahead and dive in a little bit more about your work experience. Go ahead and tell me about how many years of experience you have in your industry. How did you
Yeah.
kind of get there and end up where you're at now?
Yeah, so I started with my company back in 2019. I did 2 years in operations. I managed our advisor services clients, and so started with the small guys. So you're under 100 million in assets under management. So the assets that you're responsible for managing. And then from there, slowly worked my way up to kind of the big dogs, so the $1 billion plus in assets under management, and that's where I learned a lot about myself, learned a lot about kind of professionalism, sending good emails, the stuff that no one ever teaches you, but they expect you to know. And then from there, in conversations with the advisors that I was having, I realized their strategy kind of sucked. And strategy is really just how a financial advisor is structuring whatever account, whatever products to meet your goals or, whatever you've hired them for. And so I realized then that it was time to just look into becoming a financial advisor. And so from there, I took what's called the Series 66, which is a financial regulatory exam. I'll probably talk about it later. But became a financial advisor really with the sole purpose of helping the clients that really need the most help. And so, and again, we'll probably get into this later, but I manage all of my company's clients under the $250,000 mark.
That's wonderful. That's a great insight. So let's dive in a little bit more to that. What are the main responsibilities of that? What does your day to day look like?
Yeah, absolutely. So my day to day is going to be kind of one of three meeting types. And I don't do any prospecting myself. So because I work for the company, I manage their book.
Mm-hmm.
The first type of meeting I'm going to have is an acquisition. So you're interested in having a portfolio managed by us. We're going to have a conversation. We're going to go over your goals, your time horizon, what you're trying to accomplish with that particular portfolio. And then I'm going to give you a recommendation based on my intuition, my experience on what I think would be appropriate for you to achieve your goals. Once you get into that managed program, then that's kind of where the next two meeting types come in. And that's really client retention. So one is you got questions. If you're over the age of 73, it's required minimum distribution, which is once you get to a certain age with your traditional contributory rollover IRAs, the government has let it grow tax deferred for long enough, and now they want their money. So you have to start taking out funds from your IRA so the government can tax you. So it's RMD season, whatever it might be, they're going to call us. That's kind of our client retention, just making sure your questions are getting answered by a fiduciary, so someone who has their best interest in mind, and then also making sure the product is still appropriate, because as your life events change, the product might no longer be appropriate.
That makes a lot of sense. How do you determine, let's go and dive a little bit more into that. How do you determine what products are appropriate for each person?
Yeah, so that's my favorite part of the job, is really getting to know the client, getting to know their situation, and having a little bit of fun kind of figuring out what might be suitable for them. So, here we have Tyler. He's under 30. He maybe has a Roth IRA, and he wants to grow it with an expected retirement date of 65. So based on your age, you can take a little bit more risk because you have time to recover. You're in the industry, so you have a little bit of knowledge. So we can, so if I say, hey, how do you approach risk? and you say, oh, well, this has been my strategy prior, I can take that with a fair degree of comfortability that you actually know what you're talking about. And then let's say, yeah, time horizon, again, that's going to be to your benefit being a younger guy. And so we might put you into probably an 80% stock portfolio. I think at 100%, there's only one thing that you can compare to, and that's obviously the S&P 500.
Right.
But not financial advice. But so it's really just getting to know these clients. And for a lot of my clients, they're a little bit older though. So it's making sure we make the most out of their retirement.
Right. And pair them with the appropriate products. No, that makes complete sense.
Absolutely.
Do you feel that your industry is oversaturated?
I do, and I don't. And it's this unique kind of, I guess, dichotomy of you have a lot of salespeople that give advice, and you can always tell by how they then build the strategy. If a financial advisor comes to you and says, hey, I'm gonna take care of you for retirement, and you have 3 mutual funds in the portfolio, well, anyone can do that. Shoot, if it's 2 or less, I mean, anyone can find that single source fund. But so I think it's oversaturated with salespeople that are giving advice. However, and I think this is common in every industry, there are people, myself included, who are very passionate about what they do. And in that regard, I think we're very undersaturated.
That makes sense. So people that genuinely care about the person they're giving the advice to versus just trying to throw something simple together that not really a one size fits all.
Correct. You've got the people they're getting paid to basically, get as many net new assets as possible. And I think that really shows in the quality of, the relationship they have with their clients. Whereas I've got plenty of clients that are like, oh, Kevin, I'll only talk to you. It's like, oh, crap.
That's a good and bad thing.
Right.
Let's go ahead and tell me some of the special perks of your job.
So definitely one of the special perks of my job is stability. Everyone's going to have financial problems. Everyone's going to want financial advice. And when you have someone who's truly passionate, they're eager to keep you. So I think that, and then obviously you got good 401k, insurance, all that stuff, stock purchase, because we are publicly traded. And so, but yeah, I think that stability is definitely a perk of my job at my current company, just because that's what happens when you work for big companies.
Yeah, no, absolutely. And that's one of those things that kind of, I think, takes the weight off of a lot of people's shoulders, is just knowing that when you wake up the next day, your job's still going to exist and you're, going to have a paycheck coming in, which is great.
Absolutely.
Yeah. How about, what are some of the particularly difficult aspects of your job?
Yeah. So anytime you're in corporate America, you have to deal with corporate stuff. And that's definitely one of the downsides. It's the same reason. It's the same upside is also the same downside is corporate America. It's the reason that it's stable, but it's also the reason you want to rip your hair out. In addition to that, though, I think that the solutions that my clients require aren't as dynamic as what I'm interested in. I love the alternative investments, so private equity, kind of venture capital in a way, like your friend Matt. Like, that's the stuff that fascinates me. However, at my clients' asset levels, we aren't able to implement that because there's a lot of regulatory rules that govern alternative investments, private equity, and stuff of that nature. And so I think for me, I struggle with a lot of boredom because it's not as dynamic as I would like it to be.
Right.
That being said, I can still get excited for the clients who are truly interested, but every once in a while you get clients that, you just want to rip your hair out.
Right. I totally understand that.
I don't think that's industry specific though.
No, absolutely. It's, I think we can all relate to that when we're dealing with people, and, totally understand the frustration about wanting to deal with those accredited assets and classes and not being able to, and kind of want to, develop. What is your relationship with money?
Yeah, so I think I have a very good relationship with money. I think that I save a lot more than I probably should, and we can definitely chat about that. But I think it's a good relationship with money. I think I was fortunate because growing up, I learned the value of a dollar very quickly. I was always out on the summer days spraying the sidewalks with the numbers so the firefighters could see it, mowing lawns during the wintertime, shoveling snow, or raking leaves, always trying to find a way to get more spending money and then inevitably save it and never actually spend it. But you know learning the value of the dollar really, I think, helped me a lot as an adult, because it gave me a healthy appreciation that if I want something, I have to go earn it.
Right. No, and I think that's something I've seen with a lot of people that build those healthy relationships with money is typically they were out when they were teenagers, like you said, mowing grass,
Yeah.
painting those numbers, washing cars, and it really builds that strong foundation. So I don't think there's anything wrong with saving too much, but it sounds like you do. So tell me about your saving and investing.
Yeah, so I've been a saver since I was, 4 or 5. I mean, we used to get allowances, and I always had, 3 and 4 digit allowance accounts, and it's like, well, I guess I'll go buy a Lego. But no, and I think there's nothing wrong with saving. I'm a single guy, so I do have the 6-month emergency fund. So for the viewers, people or financial professionals generally recommend 6 months of expenses covered for single income households. And then for dual income, they're going to recommend around 3 months. However, it's always going to be based on what you're comfortable with. So if it's 4 months, makes you feel warm and fuzzy, more power to you. So I do have an emergency fund. I also have a fun little spending account that, I can kind of do what as, carte blanche per se. And then for my investing strategy right now, most 401ks do offer a employer match. So I do 100% of that. I believe it's 5%. I also have a Roth IRA because I'm under the income threshold right now to continue to contribute. For the viewers, I really like a Roth IRA because it grows tax-free. Right now, the current contribution limit is $6,500. However, if you make more than, I think, $144,000, you're no longer able to contribute. And so it's always ironic because when you're able to contribute to the Roth IRA and have the discretionary income, you're usually phased out of the actual income where you're able to.
Right.
But if you are able, a Roth IRA is a great investment asset because it does grow tax-free. And then in addition to that, I also do have some private equity holdings. One of the beautiful things about being a financial advisor with both that 7 and 66 is you do qualify through exemption as an accredited investor.
That's wonderful. There are some ways, which totally different conversation for another time,
Yes.
to take advantage of a Roth if you're outside of those income limits. Typically, it's like a mega backdoor or stuff like that.
Yeah, backdoor Roth conversions
Yeah.
and stuff like that.
too in depth to talk about today.
Right. Call me back. Invite me over.
Yeah.
I'll happily explain
The video for another time.
Exactly.
Where do you see yourself personally in 5 to 10 years?
Yeah, so in 5 to 10 years, I definitely still see myself in the industry with regards to if I'm giving advice or, more of a truly sales-based role. It's hard to say. I think it's really going to be based on what the income need is. So if I do get married, obviously I want to be able to provide a lot more. And so more of an incentive-based comp makes sense. Whereas right now I'm salary, and as long as I do a good job, I mean, it's very stable. And for a single guy, I mean, that's pretty great. So yeah, it's really going to be dependent on kind of where I am in the next 5 to 10 years. But I do think the financial services, even if it's not as dynamic as I'd like right now, is still where I want to be. Because if nothing else, the end goal is to do this pro bono to really help people that are even under the $250,000 mark.
Right. No, that's great. Who inspires you? Tell me about your mentors, role models.
Yeah, I think that I definitely have a couple couple role models, mentors. So one of them is always going to be my dad. He was successful. He did employee benefit insurance sales for 37 years. He actually retired and then became the director of development for a nonprofit just because he wanted to. And I think that everyone strives to be able to retire whenever they want. And I don't think that necessarily means you stop working. I think it means you stop relying on the money.
Right. No, absolutely. I couldn't agree more. I think one of the big goals is for the average person is to be able to stop, take a step back and move from I have to wake up and go to work today to
I get to.
Yeah, I get to wake up and go to work, or, convert their hobbies to monetary gain, whether it be, anything from jewelry making to photography to,
Right.
Being able to write like a travel blog for something and know that you're not dependent on that income to survive.
Right. And I think that's what's so cool is that, being able to see that is obviously something that I'm striving for, but I also recognize that I can't really compare where I'm at right now to where he is, because he's completed his working life, whereas I'm just kind of starting mine. Another mentor I have, though, he was the senior trader at my company and very successful, spent time on Wall Street, and very no nonsense. He's from New York. He also says he's Dutch, so I think that means he's a little bit more frugal. I don't know. He uses it like some badge of honor, and he is a great guy, but he's always been really good where kind of having that person to put you back into check, per se.
Right. Very, very direct and to the point.
Right. But it's almost too respectful, where it's like you trust him wholeheartedly. So when he's like, Kevin, you're an idiot, you're like, oh, that's the nicest thing you've ever said to me.
I think it's definitely good to have people like that in your circle, because they make sure that you're not straying from the path, and they provide that insight and that guidance that you need to grow.
Right. And I think that's the beauty of having people that legitimately care about you, is when you say stuff, the first thing they say is, well, how does that affect your goals?
Right.
And you're like, well, I don't want it to affect my goals. And it's like, well, then don't do it.
Exactly.
And then I do have one other mentor. He was my mentor in middle school and high school through a church small group, and just a great guy. He's actually the reason I got into photography many moons ago. And, he's really just been kind of, again, successful in business. That's always going to be kind of the theme I'm looking for with people that mentor me, is someone that I can emulate. Were you successful in business? Yes. Okay. Tell me what you did right. Tell me what I'm doing wrong. Tell me how I can be better. Because there's a saying that my mistakes are or your mistakes are more expensive than mine. Because if I tell you what I've done, I saved you the time and effort and the headache. And so, but yeah, I would say those are probably my having three mentors, I think it's a good number.
Yeah, no, absolutely. And thank you for sharing that. Just touching back on that, one saying that I heard in the past that I've really enjoyed is, someone who's made a mistake is infinitely more valuable than someone who hasn't, because they've gone through that and they've understood what it's like to go through that. And so you'll hear the saying that a company will never fire a person who's made like a modest mistake, because, well, now they're infinitely more valuable than if they were to fire them and have to retrain somebody and
right,
do it.
And then still make the mistake. Right.
So the short of that is, don't be afraid to make mistakes, or don't be afraid to make certain risks. Obviously, don't go out and light the office on fire. That's not, metaphorically.
Yeah, calm down, Milton.
Yeah. But, don't be afraid of being human and having mistakes. It's not going to hinder you in any serious way. In fact, it opens the doors to new experiences. So
I completely agree. I mean, I would say that I've learned more from my mistakes, like failing the test, like the humility that comes from that stuff, rather than when I'm doing successful, because it's just kind of confirmation bias at that point.
Right. Survivorship bias. Well, I appreciate everything, Kevin.
Absolutely. Thank you, Tyler.
My name is Tyler. This has been the Professional Network. If you have any questions, please leave them down below. I'll make sure to put you in touch with Kevin, or get those questions answered and respond back in the comments. Like, subscribe, and have a great day.
Have a good one.